Welcome to the Duane Buziak AI Mortgage Podcast, the place where we break down real estate, mortgages, home buying, and financial tips in a simple and practical way. If you're thinking about buying your first home, today's episode could save you thousands of dollars and help you avoid some of the biggest mistakes first-time home buyers make. Buying a home is one of the biggest financial decisions most people will ever make. It's exciting, emotional, and life-changing. But many first-time buyers jump into the process without fully understanding how mortgages, credit, and home ownership really work. And because of that, they end up making expensive mistakes that could have easily been avoided. Today, we're going to cover the most common first-time home buyer mistakes that cost people thousands of dollars and create unnecessary stress during the buying process. Let's get into it. One of the biggest mistakes first-time buyers make is starting the house search before getting pre-approved. A lot of people begin browsing listings online, visiting open houses, and imagining themselves living in a certain home before they even know what they actually qualify for. This creates two major problems. First, buyers often fall in love with homes that are outside their real budget. Second, when they finally decide to make an offer, they realize they aren't financially prepared, or their approval amount is lower than expected. Getting pre-approved early gives you a realistic understanding of your buying power. It shows sellers that you're serious and financially qualified. In competitive markets, a pre-approval letter can make a huge difference between winning or losing a deal. Another common mistake is making big financial changes during the mortgage process. This happens all the time. Someone gets pre-approved for a mortgage and suddenly decides to finance a new car, buy expensive furniture, open new credit cards, or make large purchases. What many buyers don't realize is that lenders continue monitoring your financial profile all the way until closing day. A new loan, increased debt, or missed payment can change your debt-to-income ratio and lower your credit score. In some cases, buyers lose their mortgage approval completely just days before closing. During the home buying process, financial stability is critical. Avoid large purchases, avoid opening new accounts, and avoid making sudden changes to your income or employment if possible. Another costly mistake is underestimating the real cost of home ownership. Many first-time buyers focus only on the monthly mortgage payment, but owning a home comes with many additional expenses. There are property taxes, homeowner's insurance, utility bills, maintenance costs, HOA fees, repairs, and unexpected emergencies. A water heater can fail, an HVAC system can break down, a roof may need repairs sooner than expected. These expenses add up quickly. A lot of buyers use every dollar they have just to cover the down payment and closing costs, leaving themselves with no emergency savings afterward. That creates financial stress almost immediately after moving into the home. A smarter approach is keeping a healthy emergency fund even after closing. Owning a home should create stability, not constant financial pressure. Another huge mistake is skipping the home inspection. Sometimes buyers want to make their offer more attractive in a competitive market, so they waive inspections. Other times, they simply want to save money. But skipping a home inspection can become one of the most expensive mistakes a buyer ever makes. A house may look beautiful on the surface while hiding serious issues underneath. There could be plumbing leaks, electrical problems, mold, termite damage, foundation cracks, or roofing issues that aren't visible during a regular walkthrough. A professional inspection gives buyers a better understanding of the property's true condition before finalizing the purchase. Even if the inspection reveals problems, that information can help negotiate repairs or lower the purchase price. The small cost of an inspection can save thousands in future repairs. Another major mistake is not shopping around for mortgage rates and loan options. Many first-time buyers simply accept the first mortgage offer they receive without comparing lenders. But mortgage rates can vary significantly from one lender to another. Even a slightly lower interest rate can save tens of thousands of dollars over the life of a loan. Different lenders may also offer different loan programs, lower fees, or better terms depending on your financial situation. Taking the time to compare options can make a massive difference financially. Another mistake people make is ignoring their credit score until they're ready to buy. Your credit score directly impacts your mortgage approval and interest rate. A stronger credit score can qualify you for better loan terms and lower monthly payments. But many buyers wait too long to improve their credit. Late payments, high credit card balances, collections, and unnecessary debt can hurt mortgage eligibility. Preparing to buy a home should ideally begin months before actually applying. Paying bills on time, reducing credit card balances, and avoiding unnecessary debt can improve your financial position dramatically. Another common issue is buying more house than you can comfortably afford. Just because a lender approves you for a certain amount doesn't mean you should spend the maximum. A lot of buyers stretch their budget too far because they want a larger house, a nicer neighborhood, or extra features. But higher monthly payments can create stress and limit financial freedom later. A home should fit comfortably within your lifestyle and long-term goals. You still want room in your budget for savings, travel, emergencies, retirement, and enjoying life. Being house poor is something many first-time buyers regret later. Another mistake is not understanding closing costs. Some buyers save only for the down payment and forget that closing costs are a separate expense. Closing costs can include lender fees, title fees, appraisal costs, taxes, insurance, attorney fees, and prepaid expenses. Depending on the loan and location, closing costs can be several $1,000s. Understanding these costs early helps buyers prepare properly and avoid surprises near closing day. Another mistake is letting emotions control the buying decision. Buying a home is emotional. People get attached quickly. Sometimes buyers ignore red flags because they love the kitchen, the backyard, or the location. Other times they overbid and exceed their budget because they fear losing the house. Emotional decisions can lead to overpaying or purchasing a home with serious problems. It's important to stay logical throughout the process and focus on long-term financial stability. Another thing many first-time buyers fail to understand is the importance of working with the right professionals. A knowledgeable mortgage professional and experienced real estate agent can make the process smoother, less stressful, and more financially beneficial. The right guidance helps buyers understand loan options, avoid common mistakes, negotiate effectively, and move through the process with confidence. Trying to figure everything out alone often creates confusion and unnecessary risk. At the end of the day, buying your first home should be an exciting milestone, not a financial nightmare. Most expensive mistakes happen because buyers rush the process, ignore important details, or make emotional decisions without proper planning. The good news is that these mistakes are completely avoidable with the right preparation and guidance. Getting pre-approved early, protecting your credit, budgeting properly, comparing mortgage options, and understanding the full cost of home ownership can save you thousands of dollars and reduce stress throughout the process. Your first home can become a strong financial foundation for your future when approached the right way. Thank you for listening to the Duane Buziak AI Mortgage Podcast. Stay informed, stay financially smart, and we'll see you in the next episode.